All right, I'm gonna go ahead and get started because we have a pretty good crowd here. Thanks everybody for showing up. We have about 40 people on the call, and I'm sure more will join on as we go here. But welcome to our JUMPinar series. This is Jumpstart's uh, extracurricular information sessions where we have experts on specific topics in real estate join us for a deep dive into that topic. Typically, we don't have time to go into super detail about these sorts of things at our official training program, the Jumpstart Germantown training program. So we take this time to really speak with an expert and field your questions, and we appreciate you being here. We do these both in person and virtual. So this is obviously our virtual setting. And if you want to check out upcoming events that we also host in person at the office, you can do so at jumpstartgermantown.com. And I'll be sure to put that link in the chat. And also, my last quick plug before I introduce the speaker tonight is our Jumpstart Philly loan program. We are accepting loan applications and we want to finance your next acquisition and construction project. And if you have any questions about that, feel free to reach out. I'll also put the link to our Jumpstart Philly loan program website in the chat. But yeah, I'm just going to jump right into it and not waste any time here. Tonight is our JUMPinar with I'm gonna Klehr, and thankfully you have the name of it written in the top of your screen. Klehr Harrison Harvey Branzburg LLP. We have a partner with them, Kate Missimer, joining us, and we also have done a JUMPinar with them in the past on landscape architecture and design and zoning. But tonight we're talking about something I'm excited about, but it doesn't sound like an exciting topic, tax abatements for rehab projects. And the tax abatement is something that the city of Philadelphia offers, and we encourage all jump starters to look into and apply for and receive for their real estate development projects. But I will let our speaker and guest, Kate, go into much more detail about the application process and the differences in the ordinances that the city offers. And hopefully we'll have a lot of time for Q&A from those in the audience if you have specific questions. And if there is a question we can't answer, we'll definitely try and get you the answer later on. And I'll be sure to provide our speaker's contact information afterwards, as well as a recording of tonight's event and the slideshow. So long-winded introduction, but I'm going to hand it over now to Kate. Kate, thank you so much for joining us, and really appreciate you being here. And feel free to introduce yourself really quickly, and then we'll jump right into your presentation.
Great, thanks, Derek. Just to confirm, you can see the screen on
Yep,
the slides on the screen?
all good.
Great.
Thank you.
Thank you for that introduction, and thank you all for joining us tonight and the opportunity to speak with you. Very happy to meet new developers, especially in this neighborhood, and eager to get started. It's a great city to develop in, and we welcome all the projects. As Derek mentioned, my name's Kate Missimer. I am a partner in the zoning and land use group at Klehr Harrison. We have the biggest zoning and land use group in the Mid-Atlantic region. I do spend a lot of my time doing zoning projects, as you can imagine, but I also spend quite a bit of time in the city with the Office of Property Assessment and the Department of Revenue. And a lot of that work is devoted to both application for and implementation of real estate tax abatements. So the reason that I'm excited to speak about this topic tonight is that it's a tremendous opportunity for developers in the city that a lot of times gets overlooked or for whatever reason is not pursued by new developers because they don't understand the programs that are available. So I'm hoping that tonight provides sort of an overview of what's out there. And then to the extent there are specific questions on particular projects, would be very happy to assist, sort of as you get up and running. So where would I be sort of as your attorney without a legal disclaimer?
Thank you.
Just have to let everyone know that every property is unique. What I'm doing tonight is really an overview presentation designed to give you the basics of the programs available, how they typically function, what the requirements are, etc. But to the extent that there's a question regarding application of a particular abatement to your project or some other intricacy that you're asking about, we do recommend contacting legal counsel or the Office of Property Assessment, which does have a dedicated abatements unit. So that's where I would direct you with, the detailed questions, but obviously happy to speak on the program generally this evening. So I want to start at square one, and I'm sure everyone has seen their tax bill, so they understand what it looks like. But I'd like to go over really just the basis, the real estate tax assessment. So your real estate tax assessment is set by the Office of Property Assessment in the city. At 7th and Walnut, you can walk down, you can speak to someone in person. They issue an assessment for each property in the city. The assessed value is the value they're ascribing to your property, what it's worth. And that's what's used to calculate real estate tax obligations. OPA, or Office of Property Assessment, uses an algorithm to come up with what that assessment is. It takes into account lots of different factors like prices and rental rates of properties surrounding your property. It takes into effect the vacancy rate. It takes into effect any improvements done on the property. So there are all of these factors that come into play, and the algorithm spits out that value, or the assessed value, at the end. The current real estate tax rate in the city is 1.3998%. It's really been stagnant since about 2016, hasn't changed. So the way that you calculate your real estate taxes that you pay, the actual value you're paying, is you multiply that 1.3998% by that assessed value. And that gives you the number that you owe the city for real estate taxes. So what makes up assessed value? Property's assessed value really has two main components. One is the land value. What's the dirt worth? If it was vacant, if a new owner came along and bought the land, what are they going to pay? That's what the land value represents. The improvement value, on the other hand, is what's sitting on that land. Is there a building on the land? Is it just structure? Is it inhabitable? Is it occupied? Is it commercial? Is it residential? All of those factors go into setting that improvement value. And the two numbers together result in the assessed value for the property. Real estate taxes on land value are always due, regardless of any abatement program, homestead exemption, other programs that the city offers to reduce tax liability. You're always paying taxes on the land value. So at a minimum, there'll be amount due based on what the land is worth. Those land value taxes are not eligible for abatement. So even if you were to successfully get an approved abatement for, say, 100% of your improvements, you're still paying taxes on that land value. And that's the important factor to remember. The land value can also change. And that's something that, is done typically when the city reassesses. So you may have just received a 2025 tax year notice of what your assessed value will be. And that is based on the new land values that they're projecting for 2025. But real estate tax abatements apply to taxes on the improvement value. And that's really what I want to talk about tonight. That's the area that you have that opportunity to reduce your obligation to the city. Improvement value is based on value assigned to what they call eligible improvements. So not everything you do to a property is going to result in attributable improvement value. So real estate tax abatements are one strategy to reduce real estate tax obligations. There are multiple programs, as I mentioned, but these are the main programs, and I want to just sort of highlight each of them tonight. And then again, as Derek mentioned, the focus will be on rehab abatements and how you apply for that program. But in the city, there are three types of abatements that are pretty common: 1456A, 1130, and 961. Some of you may be aware that Philadelphia recently rehabbed its entire abatement program. So any building permit issued after January 1, 2022 would be subject to those changes in the abatement program. And we'll discuss those briefly tonight, just so everyone's on the same page with what they look like and what the program used to be. In addition to what the city offers, and this is something that some people miss in their first couple projects, there's also a Commonwealth of Pennsylvania abatement for developers specifically. That's the State Act 175 abatement. So it's a state program, but it does offer relief in the city as well. So I want to focus briefly first on the Philadelphia abatement program. Ordinance 1456A. This is strictly residential new construction. In the event that a project includes both residential and commercial uses, they employ what's called a 51% test. If more than half the building's being used for residential, this is the right abatement to apply for. Same thing for Ordinance 1130. This is for commercial or industrial properties. It's new construction or rehab. And you'll note that that's a difference from 1456A. 1456A is just new construction, and it's only residential properties. For the 1130, which is your commercial and industrial properties, again, the same 51% test is used for mixed-use buildings. And the topic of tonight's presentation, Ordinance 961, is your rehab. This is strictly residential rehab. It cannot be used for hotels or other transient uses. It's full-time residential rehab. And lastly, the developer's abatement that I mentioned, State Act 175. This is for new construction or rehabbed residential properties. So commercial and industrial properties are not eligible for the Commonwealth program. And it does include new construction and rehab of those residential properties. So let's start with 1456A. This is applicable to new construction only, and an application must be filed within 60 days of the receipt of the building permit. So one key factor to remember in all of these programs is the building permit is the controlling factor for a real estate tax abatement. You need to have a building permit in hand. It needs to be a construction permit. So it has to start with that CP designator. Oftentimes you'll see, for instance, zoning permits are designated ZP. Mechanical permits are MP. So that's the nomenclature that the city uses. But in order to be eligible for a tax abatement, you want that to say CP, or construction permit. Abatement commences on the first day of the month following one of two things. If you're building, say, a single family home, the 1456A abatement attaches on the first day following the sale of that home to a third party. So for instance, if you close on a property with a new buyer on January 20th, their 10-year tax abatement would commence February 1st. So that's how that timeline works. In the alternative, if you're not selling the property to a third party, you can opt to commence your 10-year tax abatement once you receive a certificate of occupancy. And we'll talk about how you do that. So as mentioned, the term of this abatement is 10 years. And this is one of the biggest changes. It's applicable to single homes, duplexes, triplexes, row homes, single families, multifamilies, condos, etc. But the biggest change coming out of that revamping of the abatement program, historically, this program offered the abatement of 100% of the improvement value for a period of 10 years. Any building permit issued after January 1 of 2022 now is subject to this sliding scale you'll see under value of abatement. So in year one of your abatement, you're still getting that 100% value of improvements abated. But now in year two, that reduces to 90%. So for instance, in the second year tax year applicable to your abatement, you would pay not only taxes on the land value, which again are always due, but you'll also now pay taxes on 10% of the improvement value. And again, in year three, that reduces again to 80%. So again, you're paying 20% of improvement value in year three. This abatement is not applicable to hotels, and the eligible improvements must affect the assessed value of the property. So Ordinance 1130. Real quick, Derek, did you have any comments you wanted to make before we move to the next type of abatement?
Yeah, well, first I just wanted to remind everybody that if you do have questions for Kate, you can submit them into the Q&A tab on your toolbar there, and we'll get them. I see we've gotten a couple already. Second, I just want to see a lot of familiar names in the audience, so thanks everybody for coming out. I do not have any questions up to this point. I have written some down, but I think they'll be more applicable at the end, so I don't want to get you too off track.
Perfect. Just thought I'd check before we switch gears to the next the next
Thank you.
qualifications.
Sounds great.
Thanks. Okay. So again, 1130. This is a tax abatement applicable to new construction and rehab of commercial and industrial properties. It's not applicable to residential properties. So that's a typo in the first line. Apologies. It is also not applicable to ordinary upkeep and maintenance. So that's one of the keys we'll talk about a little bit with what constitutes a rehab. But in terms of commercial and industrial properties, changes to, improve the sprinkler system or upgrade the elevator are not going to be considered eligible for tax abatement. The application in an 1130 case must be submitted within 60 days of issuance of the building permit, very similar to the 1456A rules. The abatement here commences a little differently. The 10-year tax abatement for commercial and industrial properties starts on January 1st of the year following the issuance of a CO or a TCO. So property owners can elect to commence an abatement on a TCO, a temporary certificate of occupancy, if they do not have the full certificate of occupancy. This abatement term is 10 years. And historically, again, it was a full 100% of the improvement value was eligible for abatement for that full 10-year period. Now the 1130 for commercial and industrial properties is dropped to 90% for the entire duration of that 10-year period. So unlike the 1456A sliding scale, here we have a flat 90% of improvement value. So what would this look like in terms of a commercial or industrial project? In tax year 1, with an abatement on the property, you're still paying taxes on the land value as you always would. But in this instance, you're going to pay 10% of the improvement value as well. So it's going to be a combination of those two factors to result in your the tax obligation. So this is the Commonwealth program that I briefly mentioned. This is State Act 175, it's called. This is a residential tax abatement applicable to new construction and rehab of residential properties. This is not applicable to your commercial or your industrial projects. The application for this abatement program must be submitted by the December 31st of the year in which the building permit is issued. So this is an end of year deadline. I do always recommend clients file their abatement applications within 60 days. Things happen over the course of the year. If you pull a permit in January, you're going to be less than likely to remember that come December, oh, the last week of the year, I have to file my state act application. So I always recommend filing them both together. That way there's no penalty in filing early, and it's always better to get that application in rather than miss the deadline. This abatement commences on the first day of the month following the building permit issuance. And this abatement is really for developers. It's for unoccupied properties that you're working on, and it's 30 months, meaning that if you pull a building permit in, say, mid-July, beginning on August 1st, so long as that abatement is approved, you will have a 30-month abatement on the improvement value that's assessed at that property. So it's a tool for developers. It's a great program. We highly recommend participating in it, and oftentimes it does get missed. So it's important to make note of this program as well. Again, the term for this type of abatement is a 30-month term. This is the only one we'll talk about today that's not a 10-year term. One key factor is that this is a state program. So while the city can implement this for you, the city can't adjust it. So the start date and the end date are set by the state. There's state legislation authorized. There's nothing the city can do to accept a late application or delay a start date or extend on the back end. 30 months is 30 months, and it starts that first day of the month following the issuance of the building permit. One thing we do see a lot of our clients facing, and this is just a reflection of, sort of the construction climate post-COVID, financing difficulties, it's a gap issue. So what it refers to, and it's very common is any period between when your 30-month developer's abatement expires and your 10-year tax abatement commences. So, for instance, if you had, say, a 30-month developer's abatement, but at the end of 30 months, you don't have a CO or a certificate of occupancy, you haven't sold the home yet. It's complete, but it's still got a few things that are delaying certificate of occupancy or sale. That developer's abatement is going to run out. And if you are not eligible to commence your 10-year tax abatement, you fall within this gap period. That gap period, it's important to note, is fully taxable. So that's why I was saying and stressing that the 30-month abatement is a state program. The city can extend it. So once it runs out, if you're not completed on your construction, or if the property is not ready for sale, there will be a period that it's going to have taxes applicable. So just important note there. It is something that we do see, unfortunately, very often. But I want everyone to be aware of it because it is a common pitfall. But the main topic of the evening is Ordinance 961. This is a residential tax abatement. It's applicable to rehab of residential properties. It's applicable to buildings with one or more dwelling units, so it can be a single family home, a duplex, a triplex. It is not applicable to commercial or industrial properties. And again, not applicable to hotels. The application must be submitted by December 31st of the year in which the building permit is issued. Again, this is similar to the developer's abatement deadline that we just spoke about. My recommendation, and this is what I always tell my clients, is regardless of the ordinance or the program that you're applying for, I always stress file that abatement within 60 days of the building permit. That way you're covered regardless. One note about the city abatements unit, they do try to be helpful. And to the extent that you make an error and file the wrong abatement application, so long as you file one that is timely, oftentimes they will be able to switch it for you. So that's why I always recommend filing within that 60 days, because that is the shortest deadline. And in the event that what's filed is incorrect or needs to be reclassified under a different abatement program, you're still going to be timely under those other programs. So that's always, sort of a little bit of good advice to the extent that that does apply to you. This abatement also commences on January 1st of the year following the issuance of the CO. There is a note here that as a developer, you do have the option to commence an abatement on a TCO, or a temporary certificate of occupancy. Oftentimes you see this come up in larger projects where, say, you're working on multifamily building, maybe floor 1 and 2 are ready, but 3 and 4 aren't done yet. And perhaps you're up against the end of that 30-month developer's abatement. To avoid that gap period, you as the developer can opt to start that 10-year tax abatement based on the TCO for floors 1 and 2. The caveat with that is, to the extent that you were to sell the building upon full CO or something like that, the new buyer is taking what's left on the abatement. They're not going to get a fresh 10-year. So to the extent you sell, 2 years later, they're getting an 8-year abatement. But oftentimes it makes more sense because you're protected for that gap period when otherwise the building would be fully taxable. The Ordinance 961 program was not affected when the abatements in the city were overhauled and revamped. So it's still 100% eligible improvement value for a period of 10 years. The improvements to be eligible must be made pursuant to a city-issued building permit. Again, you're looking for that CP designation at the front of the permit name. And it must be improvements that affect the assessed value of the property. That's an internal determination that OPA makes, but it is important to make sure that the description of the work in your building permit that either your contractor or your architect is including does fully express the extent of the work that you're doing, to make sure that it is imperative that those improvements will affect the assessed value of the property. Oftentimes in larger projects, you'll see trades pulling individual permits. So mechanical permits like electric, plumbing are not eligible for abatement. So it makes more sense to pull a large building permit that incorporates, a lot of those costs to the extent that's a possibility, than to pull individual permits for that work down the line. So I wanted to talk a little bit about the application process, particularly for this program. It's a short 2-page application for any of these abatements, but the information that's shared with OPA is vital to your success in getting the abatement issued. So the first is property information and the property location. It must be the Office of Property Assessment recognized address. So this is an issue oftentimes when a property has gone through a consolidation or a subdivision, or there's a planned community or a condominium, because that will change an address or an account number. So you just want to make sure that you're including as much detail there as possible to the extent the address has changed and you aren't sure whether OPA recognizes the new address. I often will include something like existing or new address, AKA or formerly known as, and include the prior address as well. That way OPA can link it in your system, in their system internally, and you will have fewer issues getting it applied to the account on the back end. Always check Atlas. That's really what OPA is using. So those of you that aren't familiar, it's atlas.phila.gov. It's a city map site. It includes property information for all the properties recognized by the city. And that's a good starting point for any of this work. So the next section of the abatement application is particularly with respect to the ownership information. This is also often a sticking point. It must be based on a recorded deed. So the identified owner must be the owner of record, meaning that if you recently purchased a property or are under an agreement of sale, the owner identified on the abatement must be the owner of record rather than the party purchasing the property or a tenant of the property. Tenants are allowed to file for an abatement, but the ownership information must include the owner of record. And you'll need some general basic information for the owner, including an EIN or a social security number. So to the extent it's owned by individual, you include the social security number. To the extent it's owned by an entity, you do need to include that EIN, as well as some additional information that we'll get into on entity ownership. Again, it must be the same information that is recognized by the Department of Revenue. And we'll talk a little bit how abatements are approved so that you understand the relationship between the Office of Property Assessment and Revenue. Any abatement application is going to be sent to the Department of Revenue for a compliance check, it's called. And they will review their records for the property as well as the owner. And they will let OPA know whether or not that party is eligible for an abatement. The ownership entity must be tax compliant. That's part of that compliance check that Revenue is going to do. One of the largest issues I see in my practice are pass-through entities. Many of you may be using special purpose entities to purchase property. You're forming a new LLC. Say you own, 123 Main Street. It may be owned in 123 Main Street LLC. If another entity is paying the taxes for that 123 Main Street LLC, that entity, that parent company that's actually physically paying the city taxes, must be associated with the SPE in the Department of Revenue. If not, the Department of Revenue is going to deny the abatement application, stating that the listed SPE or entity on the application is not tax compliant in the city of Philadelphia. So the process to go about that is to reach out to Revenue at Taxpayer Services and ensure that the two entities, the payment entity and the ownership entity, are linked in their system for tax payment purposes. You will need the EIN or an affiliated social security number for that. You also need to identify the year the business entity was formed or business began. That is requested on the application as well. Again, the application can be filed by not necessarily the owner, but by a tenant or an applicant. We as attorneys file them. Tenants can file them. Property manager could file it, or an expediter or agent. It must include the building permit number. Again, that's that CP designation that we're looking for, as well as the permit issuance date. And that's really their check, right? To make sure that you're filing timely. That's that 60-day deadline or that 12/31 deadline, depending upon the particular program. Again, with the ordinance 961, it's a 12/31 deadline. I do recommend filing within 60 days of that building permit, just to preserve all your rights. You also need to include the date construction began or is expected to begin. This can be general, it can be an estimate. They're going to ask you a month and a year. The last figure is the construction cost. And you're going to want to be as realistic about this as possible, because that's going to serve as the basis for the value assigned to the improvements. So you want to make sure that that reflects your anticipated cost. We did mention briefly the description of work. It's important. It must indicate that the work being done is a rehab. So you want to make sure you're talking with your contractor and your architect or whomever is completing your building permit process. It cannot include that ordinary upkeep or maintenance, improvements to the sprinkler heads or working on the elevator is not going to be, counted as eligible improvements for the abatement program. So again, I recommend taking a look before that building permit application goes in at that language that's being suggested, just to make sure that, down the line when the building permit's issued, the work described is going to reflect that this is a rehab project for eligibility for this program. So let's talk a little bit of how that application, once complete, is going to be processed. And I do want to note two other pieces of ownership information you're going to want to include in there. Every account is going to need a BIRT number or a business income receipts tax number. That's your Philly city tax number. Even if your company has your SP or ownership entity has no other business in the city, if they're owning property and they're going to be paying taxes, they will need what's called a commercial activity number. That's required to get that BIRT number. And that's that number that's requested on the application. So just wanted to throw that out there so everyone's aware of that as well. Typically, if you have an accountant, they're familiar with that process. That's who would apply for those. But you can apply yourself through the revenue portal. It's a relatively simple process, but it does need to be done so that you're eligible for the tax abatement. So a abatement application is submitted to the abatements unit in the Office of Property Assessment. It can be submitted in person. A lot of times lenders like you to submit in person so that you can get a time-stamped submission so that you can confirm you were submitted timely. You can also submit via email. They do typically give you an email receipt, but it can take several days. And to the extent you're close to the deadline, I do recommend taking that hard copy down to the office and having it time-stamped. That way there's no doubt about you filing timely. OPA logs the application, and the first thing it does is it's going to pull together a whole batch of applications that were received over the course of, say, 2 weeks and forward them to the Department of Revenue. And the purpose of that, again, is to check for tax compliance. In order to be eligible for any of these abatement programs, you must be tax compliant in the city. And one of the biggest issues we see clients run into is that it's not necessarily just with respect to the property you're applying for an abatement for. So if the same entity owns multiple properties in the city, if they owe taxes 3 zip codes away, they will be denied an abatement on the application they're submitting because of that other tax liability that's still out there. Applications are referred on Wednesday of each week, typically. Again, I did mention sometimes they'll end up waiting and submit 2 weeks at a time to Revenue, but they do submit at least once every 2 weeks. Revenue takes, again, about 2 weeks to review tax compliance. What they're looking at is real estate taxes, any BIRT taxes that are due, any kind of other city tax, wage taxes. They're really looking at the gamut. It's not just real estate taxes, because again, your eligibility for these programs is any tax liability under review. So what if there's a tax issue? What revenue does is they will send you, and they send it via mail, so it can take some time to get to you, a non-compliance letter, it's called. This is not really a denial of your abatement. What it's saying is, as of submission, something is not tax compliant. Something is not looking as it should in terms of the revenue review. This letter is mailed to the identified applicant. Non-compliance letter usually indicates a general issue for non-compliance. It may say something like taxes owed, but it's not going to tell you exactly what taxes are owed or say what returns have not been filed, etc. Even if the business is not pulling in any income, $0 returns must be filed. So that's something that your accountant should be on top of. But to the extent that there's an issue, you want to make sure that those returns get filed. Even again, if there's no tax owed, $0 returns are required. There is a general mailbox at Revenue. You can reach out to tax.clearance@phila.gov. I will say that this is one of the busiest units in Revenue, and the delay on the response to this can be, a little bit of time. So to the extent you can get it out in front of some of these issues and ensure that, all of your entities are affiliated, all of your taxes are paid, you can really avoid some delay here on the implementation and approval of your abatement if you get out in front of this. So what happens when the abatement's approved? If there are any tax issues, or if you fly through the tax compliance review, OPA will issue an approval letter. It's typically 2 pages. The first just states that a review has been conducted, you've been found to be tax compliant, and you've been approved for a 10-year abatement. Page 2 is the important page. Page 2 is your certificate of commencement. No abatement will be implemented or attached to your property other than that developer's abatement, that 30-month State Act 175. None of the other 10-year abatement programs will attach until that certificate of commencement is completed and returned to the Office of Property Assessment. So that's the key. That's the trigger that starts the eligibility to attach the abatement to the property. The certificate of commencement must be returned to the OPA with a copy of the CO, or in the instance of, a sale to a third party, a copy. Typically they submit, and the title company will often do this for new buyers. They'll submit a copy of the deed showing the new ownership. Once the abatement is approved and the commencement form has been submitted, the abatement can be implemented. Should say implemented, not implanted. Each tax account is assigned to an individual evaluator. OPA is made up with several groups of evaluators who are all assigned different accounts, and they're typically based on the use of those accounts. So for instance, there's an industrial unit and they only work on industrial properties. There's a multifamily unit. Those evaluators only work on multifamily buildings. And obviously there's a single family unit, several members to that unit. They only work on single family homes. So the evaluator that's assigned to your OPA account is the one who creates the assessed value for the property. They're the people that are going to go into OPA system and physically implement the abatement. Once the abatement is implemented, you'll typically see the value on, say, Atlas or the Office of Property Assessment website. That will reflect, you'll see tax exemption or exempt improvement value. And that's where you'll see the abatement for your information and confirmation that has been implemented. So that's really the overview I wanted to go through. I know that was a lot to take in a short amount of time, Derek, but I do want to make all the information available, and then happy to take
Yeah.
specific questions.
Absolutely. That was fantastic. Thank you so much, Kate. That was really thorough and I think answered a lot of my initial questions. And also, of course, like most things with the city processes, opened up a lot more questions. But
Sure, sure.
I'm glad we got you here to go through it. And I see there's been plenty of folks who submitted questions through the Q&A so far. So I'm just going to remind everybody to do that while I ask my couple ones here. So yeah, if anybody has questions, put them in the chat. I'm gonna start just kind of going back and forth with Kate, and we'll go as long as we need here. Hard stop at 8.
Sure.
My first question for you is actually not related to the tax abatement, but can you just give a little bit of a background on your organization, Klehr, Harrison, Harvey, Branzburg? You didn't really plug what services you offer to developers. I want to make sure you get a chance to do that before we hop off the call.
Appreciate that.
Of
We
course.
are a full service firm, but as I mentioned, my group focuses on zoning and land use in the city. We do everything from single family townhomes to, you may have seen us on the large Hillco refinery site. I'm also doing the Sixers arena. Personal feelings on that aside, I know that's a controversial project, but we're working on that as well. So we run the full gamut. We do have the largest contingent of zoning focused practitioners in the Mid-Atlantic region. So chances are big projects come up, somebody from my office is involved. And it's really great experience because we have that pool of knowledge all in one place. So
Great.
it's been great thus far. I've been at Klehr for a little over 5 years now. I was at Obermeyer before that, doing the same type of law with the same team. We recognized that Klehr was the spot for land use and zoning. So our group picked up from Obermeyer and moved up the street. So we're all very happy at Klehr. Klehr does also offer financing assistance. We have a full, robust real estate and finance team. We also have a construction litigation department that handles many of those. Disputes are inevitable, unfortunately, and having the right person in your corner is super helpful. But we also have a family law section and a business and corporate law department. So we really run the gamut of services. But again, our focus is particularly, we like to say dirt work. We do focus on development, construction. I also do planned communities and condominiums, which are becoming more and more popular as a financial tool and an ownership tool to sell interests in individual properties. So happy to help with any of those and answer other questions that may raise too.
Great. Yeah, for sure. And I will be sure to include your information in the follow-up email so people can get in touch as well as the website.
Great.
And
Great.
yeah, and also I see a couple people asking, we will be sending out the recording of this presentation as well as the presentation or the PowerPoint that Kate's going through. So worry not that that'll all come out tomorrow morning after this session. So, okay, my next question, this is related to tax abatement. Can you hold the State Act 175 abatement and Ordinance 961 simultaneously, or is it like a one after the other, and that's where the gap issue comes into play, or are they simultaneous? How does that work?
That's a good question, and it's a great starting point for sort of an expanded conversation. The application process is simultaneous. You'll want to apply for both at the same time. Again, they have the same deadline. I do stress that you apply within that 60 days, just to the extent that you may need one of the other programs that are available. But you do want to apply at the same time. But then the developer's abatement, that 30-month period, will kick off the first day of the month following the issuance of the building permit. Mm-hmm. Your 10-year abatement, on the other hand, your Rehab 961 abatement, will not start until there's a CO issued and that certificate of commencement is returned to OPA. So it's designed so that developers get that benefit first during construction, that 30-month period from the state, and then they shift into the 10-year once the construction is complete, is the design. Obviously, there are delays in construction, and that's where you run into that gap.
Yeah, that was my guess. And it's like sort of if your construction is going to take 1.5 years, 2 years or something, right? And you want to make sure that during construction, you're getting the benefits of that abatement. Yeah, makes perfect sense. Thank you. Yep. Okay, next question I have is receiving that certificate of occupancy. Is that something that's automatically issued with the building permit when it's completed, or do you have to obtain that, or can you just provide the completed building permit to OPA, or does it need to be the CO specifically?
So typically it's a statement of completion if the project is not eligible for a CO. But oftentimes when you're working with L&I through your building permit, they're having them come out and do inspections. when you're complete, you'll call for that CO inspection, and that's when they'll issue your CO. If you're eligible for a CO for certain projects, the CO wouldn't apply, and you get a certificate of completion or a statement of completion.
So if you're going through the residential building permit process and you do your final inspection, it's completed, you're good to go.
That's right.
Okay, great. Um, let's see. I know we have a lot of viewer questions, so I don't want to prioritize mine too much.
Sure.
My last one, and then we'll move to the audience, is, and I'm sure there will be some questions about this coming up, but calculating the improvement value. I know you said that that's kind of an internal OPA decision, and two factors you mentioned were the construction costs that you enter in on that application, plus the description of the work that you're entering in. I don't expect you to tell us exactly the method of their madness, but what guidelines would you give for people in terms of what's reasonable? I'm sure there are some people who might think, oh, I could just put a higher construction cost in there, so the improvement value seems higher, but that seems counterintuitive if you're not actually putting that improvement into the property. So can you just talk a little bit, again, I don't expect you to give the answer outright, but what can people do to kind of make their case to OPA and it be like a reasonably, so there's not any chance of it getting shot down because, hey, that doesn't make any sense. You know what I mean?
Yeah. One key factor to remember is when you're paying for your building permit, you're paying based on that construction cost, right? So those two fees are related, and you're not going to want to artificially inflate one and pay that fee with the possibility of not getting credit for it on the back end. So those two sort of keep each other in check, I think, a little bit. But I do want to make sure that people are being realistic about what their construction costs are. Don't save yourself, a couple $1,000 on the building permit fee when you're going to cost yourself on the back end on, improvement value based on a lower construction cost.
So basically, the OPA will put it together and say, hey, your building permit says the cost of work was 100,000, on your abatement it says 150,000. So I hear
That's
what
right.
Got it.
Yep. They have to be consistent.
Great. Moving on to our viewer questions here. The first one comes from Alfredo. Again, this is kind of a reiteration of what I said. How is the abatement value made? How do they determine the value of your improvements? So I'm going to just move on past that because Kate answered it. Emre asked, if I receive my building permit and apply for State Act 175 or Ordinance 961, and the city does not get back to me for months, when does the tax abatement commence? Will I be reimbursed for the duration of my project from the time I submitted the abatement request? And I guess we're assuming that they, got a timestamp from their application at the city. So is there any is it on the developer to kind of follow up with OPA, after that response time is out, or is there any, what's the again, disputes are common, I'm sure, but
And this is really one of the largest areas that we see issues that unfortunately OPA gets, they get slammed with these applications, and many of them sit for several months. Oftentimes what will happen is, to the extent everything was filed correctly and it's just been a delay on the OPA side of things, once the evaluator goes in to implement the abatement, to the extent that a real estate tax bill or something else has already been sent that doesn't reflect the abatement, you'll get what revenue calls a recertification bill, meaning that you'll get a new tax bill, and it may be for taxes you've already paid. And that will reflect the abatement value. And what'll happen is you'll get a credit on your account. Unfortunately, you have to go through an administrative process to apply for, reimbursement of that credit, or you can apply that credit going forward. But oftentimes, that's common, unfortunately, that OPA is so behind in implementing a lot of these. That you need to make sure you're staying on top of making sure they're filed correctly, that you have documentation was filed correctly, and you're keeping good records.
And I'm assuming, just like with L&I, just kind of continually following up and getting direct contacts of people, all great suggestions.
That's the value. Yep.
Lamar is asking, for Ordinance 961, what does the building permit number need to start with? So I did see in your presentation, you mentioned CP a couple times. Would it be RP for residential properties, or is it still CP?
Typically it's CP. For one-off residential properties, you'll see an RP, and that is eligible. But I did want to make sure to include that construction permit CP designation as well. Yep.
Yeah, got it. Um, all right. Kalechi is asking, does the city reassess the property, meaning the land value, when they see the Ordinance 961 application? So is there any trigger, of submitting that abatement application that they're going to reassess the value?
Not at the time that you submit it. What happens is the city reassesses. Technically, they're supposed to reassess every year. They don't every year, but you do see changes. And oftentimes, what'll happen is an evaluator may reach out to you and they may request your construction schedule. And one of their questions will be, as of January 1 of tax year 2025, how far in the process will you be? Will you be 25% complete? Will you be 50% complete? And that's how they'll determine the appropriate value that the property should reflect as it's going through, the renovation project.
Got it. Victoria is asking, do any of those tax abatements apply to a commercial mixed use 2 zoned property, CMX2, new construction? It's 3 residential units and 1 commercial unit. So which ordinance would that fall under?
Without getting too specific, typically you want to file a 1456A for the bulk of the building being residential. But again, there are, intricacies there to the extent that you can separate out the commercial. You may be able to get credit for that as well. There's, a lot of moving pieces there,
Really,
but
really depends on the makeup of that specific property.
that's
Gotcha.
right. Yep.
Okay. Got it. Next question here is from Brenda. She says, my property is a full gut rehab. The building permit starts with RP, not CP.
Yep.
The project is almost completed. What can I do to become eligible for the tax abatement? So I'm not sure when they issued those building
The
permits.
key would be when that RP permit was issued.
Mhm.
And to the extent that it's not the same tax year, it's likely that, you've missed the boat on that. There is a process. It's called a nunc pro tunc appeal, meaning that I failed to file my abatement on time. Please grant it anyway. Very rarely does that happen, but it can't hurt to at least try that avenue to the extent that you've missed a deadline. If there are exigent circumstances, sometimes they do allow you some grace. So if there are details that support it, that may be an avenue to explore.
Great. And I have a question here about just kind of tax abatements in general. And I realize we never really defined exactly what abatement is, but could you just speak a little bit maybe about like the concept of the tax abatement and why the city is making this available? Like what, from a higher level in development across the city as a whole, what is this abatement providing?
Sure. So tax abatements were originally designed to promote development, right? And the idea was that, hey, if you invest in the city's in return going to give you a break on the taxes. So they wanted to bring more construction and more development into the city. It was a time when they weren't seeing a lot of new projects. Obviously, times have changed quite a bit. But when it was first initialized, that was the goal, to bring people into the city who were doing work elsewhere and say, look, we have this great program that if you come here, you bring your dollars here, we'll help you out on the back end. We'll give you a tax break. And an abatement of taxes is really that no taxes due for this period. Now that has changed a little bit. We did talk about how it's no longer 100% for some of these programs, but the residential rehab is still at 100% for 10 years. So that's an important factor.
Great. Alfredo is asking, is there an in-person place to apply for the State Act 175 abatement since it's not the city? Yeah.
So the state act application is submitted in the city with your 961, your 1130, or your 1456A. You submit them both to the city office of property assessment because the property is located here. That's where the submission goes.
And you're not interacting with the state at all through that process?
It's all run through the city, but the caveat there again is the city has no authority to change it, right? So they can't change the start date or the end date. 30 months is 30 months and it starts the month after the building permit. There's nothing the city can do.
Got it. All right, and we have a few minutes left here, but plenty more questions, so I'll get through as many as I can here before we wrap up. Maya is saying or asking, what is the benefit for a normal first-time home buyer that's making improvements such as a new roof to their long-term owned property? Would this fall under the 961 category? And I'll tack onto this. Is there any differences for an individual versus an LLC receiving these abatements?
There's not. Again, the identification information would be different. You'd have to include your social security number. Um, the pitfall I see there, and it's, you're running into the same, is that replaced roof really going to change the assessed value of the property? Or is that wear and tear maintenance of your home? That's what, would be something that OPA would have to determine. But I don't know that replacing a roof would be sufficient for abatement purposes. It's just not what I've seen.
Got it. Sorry, I'm trying to read through these questions quickly
Sure.
as they come in. Yes, so what specific taxes is the abatement referring to? Is it property taxes or city taxes? I mean, the city real estate taxes, right?
Yeah, so for purposes of what's abatable, it's your city real estate taxes. But for that compliance check, again, revenue is looking at any taxes. So any obligation within the city, they're going to flag if something's not right.
Got it. Emre is also asking, is there a limit to how many abatements you can receive as long as they qualify? Can they have an abatement on 10 different properties at once, for example?
Absolutely. And you can have multiple abatements on the same property to the extent that, there are different building permits that were issued for that property. But obviously, it can't be multiple abatements for the same work, right? Because they're all going to be tied to individual permits.
Right. Okay, Tracy's asking, I have a mixed-use, commercial mixed-use full gut rehab with 2 residential units and 1 commercial unit. What ordinances do I file under? I think we answered that earlier. It kind of depends on the specific size of the units and that property specifically. So sounds like a great thing to reach out to Kate about afterwards for some specific answers on that. Kalechi is asking, if a building permit was already submitted and approved, can another building permit be submitted and approved? This is under the scenario that adjustment is made to the scope with an increased cost. Interesting. So I guess are you, and to add on to that question, if your permit expires or if it doesn't go to completion, I guess what position do you put yourself in then? Do you need to start the whole process over again, or can you kind of revive that expired permit? How does that work?
So from an abatement standpoint, it makes sense to submit a new application. And the reason being that the abatement is tied to the specific building permit. And if you're amending or extending an existing building permit, you're not changing the issuance date, right? So that remains the same. And filing an abatement based on that amendment, you're still late. You've already likely missed the boat if it wasn't filed timely under the original permit. So to the extent that it's worth it and you want to go through the exercise of pulling a new permit, that obviously would be the recommended path.
All right, awesome. Kate, I cannot thank you enough for your time. This has been really excellent and thorough. We really appreciate you
Thank you so
volunteering.
much for having me. I appreciate it.
Of course, yeah. And real quickly, before it is 8 o'clock, so I'm going to go through our wrap up quickly. We do have a couple in-person events coming up at Jumpstart Germantown. One is next week with economist Kevin Gillen. He is with the Lindy Institute from Drexel University, and we're really excited to have him back for another Philly real estate market update. He does these great quarterly housing reports, and next week in person at our office, he's going to give us the rundown on his most recent report, and this will be the first one, I think, a year and a half or 2 years, so very excited for that. Then the following, or 2 weeks later in December, we have the last JUMPinar of the year, which is an in-person event with Neil Goldman on energy audits and code compliance. And he reached out over the summer and was really interested in sharing this information with Jumpstarters, and it's increasingly applicable with the benefits that are being given to energy compliant properties and kind of the opportunities that are out there. And then later in January next year, we have the basics of refinancing with Sam, the money man Shalansky. He is a hard money lender, and he does refinances for projects that are similar to Jumpstart projects, and we'll kind of give you the basics of that refinance process and what you can expect as that exit strategy from your buy and hold Jumpstart loan. So again, those are our upcoming events. Those are all in person and will be hosted at 4701 Germantown Ave, our office. You can register for them at jumpstartgermantown.com/events, and you'll receive a confirmation, and look forward to seeing you there. Lastly, I just want to remind everybody, we will have the recording at jumpstartgermantown.com/media. but it'll also be on YouTube. And I'm not sure if this would work as an audio only version, but if I can do some magic in the editing, I'll get it up on Spotify and other places where you can find podcasts. But for the most part, you'll be able to view this video recording as well as go through Kate's slides that we'll send out tomorrow. So one last time, thank you so much, Kate, and really appreciate everybody on the call. We had a great crowd tonight, over 50 people. So this is clearly an important topic, and I think a lot of great answers were given. So thank you.
Great. Thanks, everyone. Appreciate it.
Have a good night, everybody.
Good night.